Welcome back to the channel. We've got a great topic for you here today. We're going to talk about what does it kind of take to qualify for a mortgage, and even more importantly, or just as important, money. I need money to buy a house. And what does that look like? What do Americans have in the bank? And how does that impact their ability to buy a house? Mack, Dadyan from NFM Lending, welcome back.
Hey, Robert. Great to be here.
Hey, so Mac and I were talking. He sees the nitty gritty of people's personal finances. I don't get to see that part. He gets to see that. So Mac's got the inside scoop on how we're doing. How are people doing in general? And Mac, what's it going to take to buy a house? What kind of credit do I have to have? How much money do I need in the bank? And what are you seeing out there?
Sure. Yeah. So anyone that's joining the channel for the first time, I'm Mac. I'm a senior loan officer in the state of New Jersey, based out of Haddonfield, New Jersey. So my job essentially is when you link up with Robert and you tell Robert you want to buy a house, I'm the guy that determines if you're going to be able to get that mortgage once you go under contract to buy that house. So, I've been doing this for about 9 years. And I have to say, Robert, right now, people are having a hard time qualifying overall. And a lot of that has to do with how their finances are structured. And I think a lot of people just don't know what it takes. Because a lot of people that come to me, I see credit scores that are far too low. I see assets or money in the bank that's not really anywhere close to where it needs to be, or choppy work history, or work history that's not long enough. But really, I don't blame them for wanting to venture out and see if they can get pre-approved, because honestly, with what rent is nowadays, it just makes sense. So yeah, go.
No, and there's not a one size fits all when it comes to mortgages, right? Because you offer several different types of loan products that are out there in the marketplace. And depending on a person's particular financial situation, one product may make more sense than a different product. And the guidelines are slightly different, right? And your job is to trying to kind of look at them and go, okay, this is what I have here. These are the ingredients for this soup, right? And this soup should go over here in this bowl, because this bowl is a perfect setup and it's a good fit. However, you do have to have a few bucks. You do have to have minimum credit scores, right? You can't have like a 400 credit score to buy a house, right? I mean, there's no such thing, right?
Yeah, I mean, people have it, but not to buy a house.
Yeah. I mean, obviously, I still believe, even with the prices the way they've increased in the last couple of years, it's still better to own than to rent. Like historically, real estate goes up over the long haul, right?
Yeah.
It goes up and down short term. Nobody knows what next year will look like, but we're pretty sure that 10 years from now, it'll be better than now, right? It'll be higher than it is now.
Look, if you buy a house today and you say you don't want to do it because interest rates are 8% and you'll just rent for another year, well, renting, your interest rate is 100%. So 8%, 100%. I mean, at least with owning a house, you build some equity into it. Now, I think with qualifying for a mortgage, I mean, let me just give you the basics, right?
Yeah.
So this is for a majority of loans. Majority of loans, you have to have at least a 620 credit score, okay? And we don't only just look at the credit score, we look at the credit profile, and not only do we look at the credit profile, but the automated underwriting system that we run these loans through determines overall risk based off of your credit profile. So it's your score, it's how many lates have you had, how many collections do you have judgments, have you had a bankruptcy? So you might have the score that you need, you might have that minimum score, but the profile might hold you back. So starting point, 620 credit score. The profile, it's not a whole lot for you to do about it until we take a look at it and we have a conversation with you, because we'll let you know, hey, you have to work on this. You have to get this removed. You have to pay this account down. We have ways of determining how to improve your overall profile. But what you can start with today is working on that credit score. And that's just keeping your debts down, paying bills on time, and not incurring collection accounts.
Yeah, that's great advice. A lot of people don't realize that. I think that until, like anything in life, truthfully, like until something becomes important to us as a human,
Mhm.
we're not really paying close attention to it. So if one day you wake up in the morning, not you obviously, but somebody wakes up in the morning and they go, I don't like the way my pants fit, right? Then they're going to start looking at, well, what can I do to make my pants fit better? I could buy bigger pants, right? Or I can say, okay, well, how can I fit into these pants the way I used to? And then just like finances, right? And then so you look at that and go, well, maybe I can change some of the foods I eat. Maybe I can exercise more, right? So finances are the same way. So if you review a profile, as a term you use, you review the credit report, the score, the profile, and you say, look, these pants are a little tight. We need to do something here. You'll give that prospective home buyer some advice and say, look, you need to do this, this, and this. In general terms, keep your debt, like you said, keep debt low, right?
Yeah.
Pay things on time. Fighting with collections sometimes isn't worth it because that can really do some damage when it turns into a judgment. Now it may or may not be correct. And I think that it depends, right? In your industry, if it's a medical collection, it's different than if it's just like a collection from a cell phone carrier, right?
Correct. The majority of loan programs don't care about medical collections, and for some time, the you're for some time they were still reporting, but apparently, if my understanding is correctly, there's a new rule in regards to medical collections in the credit report that it's going to have less of an impact. That doesn't mean don't pay your medical bills, but at least that might be one less thing you have to overly concern yourself about. Now, with this whole process, I mean, it costs you nothing for us to take a look at it. And look, like if you're a mechanic, I'm not going to tell you how to fix my car. For the same reason, if you want to buy a house, you have to talk to a professional,
Mhm.
because there's been plenty of times that people have said they're working on their credit and they're paying things down. And 6 months later, I talk to them and their score is still a 570, even with paying things down.
Yeah.
So we're going to run an analysis and determine what you should focus on to get your score to where it needs to be. But again, the basics hold true. Pay your bills on time. Don't over leverage yourself. Don't take out too much consumer debt. Don't run up your credit cards. And honestly, your score should be exactly where it needs to be.
There's a lot there in my head, brother. I'm trying to trying to contain it. Yeah, all of that makes sense. I would argue that, like, and we'll use the last few years as an example.
Sure.
Student loans didn't have to get repaid for the last 3.5 years, roughly,
Right.
and now they've recently started or about to start again. I would argue that most people didn't take that money and put it aside every month, and build those financial muscles and say, oh, okay, my student loan payment is $300 a month. For the last 3.5 years, I don't think they took $300 a month and put it aside,
They
right?
didn't, and that holds true based off of, what I'm seeing on credit reports and what I'm seeing in bank statements as well too. There's must be a misconception out in the marketplace that, there's first-time home buyers out there that cover all the expenses, which in some cases they do exist. If you're a first-time home buyer buying within a certain county, we might
Yeah.
have the ability to qualify you for one of those specific programs. It's not always a guarantee, and it doesn't always cover the entire expense that's out there. So you are still going to incur some expenses when you're buying a house, out of pocket expenses up front. And I can't tell you how many times I look at bank accounts and they have less than $1,000 in the bank account. You just can't buy a house with, that much in savings. So again, I tell a majority of prospective home buyers, there's not necessarily a magic number, but I would try to have anywhere from $5,000 in the bank to 10. Again, there's unique circumstances where you're getting a grant program or you're a VA, a veteran buying a house. Veteran loans are zero money down. And in a lot
Right.
of times, as I've seen with you, Robert, you've been able to get seller concessions to cover closing costs.
Right.
But remember too, you got to move. You know, you got to buy some furniture. I mean, I know me, I wouldn't feel comfortable going out and, you know, taking on that amount of an expense without some little bit of a nest egg. You know, again, when you come to us, we're going to work with what you have. But just my piece of advice is just try and get your savings up and try and keep that consumer debt down so you have a better time qualifying for a loan.
Yeah. I think, correct me if I'm wrong, if you're familiar with this statistic. I heard a statistic that 70% of Americans, I'm not sure if it's Americans or just households, have less than $1,000 liquid for an emergency.
I believe that.
That's wild,
Yeah.
right?
Yep. I can't confirm I've read that, but I absolutely believe it just based off of what I see every single day. I mean, I'm doing more grant loans than I ever have, you know, and it's primarily because people just don't have the money. There's very few home buyers that take advantage of the first time home buyer program just because they want to. You know, almost every single person I put in that program is because without that program, they wouldn't be able to afford to buy a house. So, you know, I think it's important to note the trend that we're seeing there, that most households just don't have a lot in reserve assets.
Well stated, right? So everyone's going to have a different comfort level with what reserves means. Because so you may qualify someone with that has X number of dollars available, after, you know, kind of forecasting what they'll have left after they purchase the house, grant, no grant, whatever it is. But then the question is like, okay, what happens on that rainy day? What happens if I'm buying a single family detached home? What happens if my sewer pipe outside breaks
Mm-hmm.
and I need to get that fixed?
Yeah.
Do I have it? Do I have access to it? You know, there's, and look, I don't think you can answer that for people. I don't think I can answer that for people. But we want to make sure that everyone's educated to the best of our abilities to make sure that they're making the best decision for themselves and their families. Right.
Sure. Yeah,
Yeah. We
absolutely.
just, yeah, just don't know. And I guess part of it is that the truth is, don't blame yourself if you don't understand this stuff, right? Like I always tell people that I'm like, don't blame yourself because you weren't paying attention to it until now, right? So now is the time to start paying attention to it, and you can become a homeowner. Sometimes it's quick and easy, and sometimes it's a little more painful to kind of get things in order. But there's nothing like being a homeowner, and there's all kinds of tax advantages, and just it's just a great investment over the long term. And Mac will help you get there.
Couldn't agree
All right,
more with you.
awesome. Mac, thanks as always for joining the show. We
My pleasure.
appreciate it.
Happy
Appreciate
to
it
be
very
here.
much. If you guys want to get in touch with Mac, he does lending in this tri-county area, tri-state area, plus in Florida. His information will be down there below on our YouTube description. Our contact information will be down there as well. If you're looking for a home in Southern New Jersey or actually anywhere, we have a nice network of like-minded professionals throughout the United States. Please like this video, share this video, subscribe to our channel. We really appreciate it, and it does mean a lot to us. Mac, thank you again.
Thank you.
And we'll see you guys again real soon.